I think the more important way to answer your question is not talk about some of the general stuff or inflation or even against the stock market, is to admire how it's performed in an environment wasn't as conducive as it is now. So that would argue that I still think it has to go a lot higher over time, but I think a reasonable target.
And I'm not saying that the gold can go to the moon and beyond to the stars or whatever, but it is a fact that every time this has happened and this chorus has come out of, oh, that's the peak at 2000. Oh, no, well, that's the peak at 2500. Oh, no, this is the peak at 3000. That's way too high, too fast. And, 3500. Oh, well, this is outrageous. This is ridiculous. Gold is not worth that much, blah, blah, blah. Every time. And now here we are looking at 37 in the face, closer to 4000 to 3000. I don't know where it peaks.
Gold has thrived in tougher times. Now the path higher looks wide open. Peter Grandich, a veteran market strategist, highlights that gold's strength has been remarkable even in periods when conditions were less favorable than they are today. With the current backdrop, he sees significant upside ahead, setting a target of $4,000. At record highs, he emphasizes that gold faces no real technical resistance apart from psychological round numbers. Grandich also points to gold's strategic role within the BRICS framework. He argues that the massive accumulation of gold by these nations is not speculative or aimed at short-term profit, since they cannot simply sell it off for quick gains, but is instead preparation for a new system of trade. Despite gold trading above $3,600, interest in North America remains surprisingly muted, especially compared to countries like China, where buying gold is a deeply ingrained cultural habit. When it comes to silver, Grandich admits his outlook has shifted dramatically. After years of viewing it as a second-class citizen compared to gold, he changed course earlier this year when silver fell below $30. Since then, he has embraced silver as a standout opportunity, predicting that it will not only keep pace with gold but likely outperform it for a time, a trend he believes is already unfolding. Addressing skeptics who reference the Hunt brothers' silver cornering in the 1980s, Grandich notes that an inflation-adjusted equivalent of that $50 spike would place silver closer to $200 today. In his view, the case for triple-digit silver is not only realistic but also a legitimate long-term target. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.
Well, as somebody who almost 5 years ago decided to sell all his stocks and bonds to own physical gold, and then give that advice to a financial planning group that I'm part of, and of all our clients, only one listened. We still have a lot of people that are not in gold at all. And I think that's one of the underlining stories that isn't discussed, that for a market that's literally outperformed stocks and bonds since the turn of the millennium. So think about this, if I just sidetrack for a moment, Jesse, and some in the financial institution will take it as it's directed to them. They shouldn't. It's an overall view. First of all, after 41 years in the business, almost 2/3 of the financial advisors giving advice today were either not born or in diapers when I started. And they've only been in since the millennium started. And yet, if you'd ask almost all of them what's been the best performing investments, they'll tell you stocks and maybe bonds second. None of them talk about gold, but gold outperformed both of them. And yet, here, as you pointed out, as we hit 3,600, still not any really widespread interest in North America. And I think when you go to other parts of the world, there is. Look, in China, Jesse, and I know you're familiar with this, on weekends they go shopping to buy gold. Here we go shopping with money we don't have to buy things we don't need. So I just think the underpinning, even though the price is up, and this is very important, maybe others might not say this, but I think it's worth hearing. So when I started in the business in the early 1980s, most people perceived stocks were dead. For 13 years, the Dow only traded between 700 and 1,000. In fact, the very famous Business Week front page said equities are dead. Wall Street was extremely bearish. And an unknown young man came out of Gainesville, Georgia, named Robert Prechter Jr. with a philosophy and a technical analysis no one really knew of, Elliott wave theory, and said the Dow's going to 3,600. And they just prosecuted him to call him every name in the book. And then when the market took off, he became popular, and then he made a call about the crash in 87 along with me. And the perception was, how could it possibly go to 3,600, let alone a few decades later, 36,000 and more? So that same feeling's in gold right now. People, especially people that have been bullish and profiting from it, this 36, this is way out of line. Yeah, it's great. It give you all the reason, but how could it go a lot higher? It's not possible. You have to take that same philosophy. There's no reason it can't. In fact, I would argue it's not cheap anymore. Someone that was buying it at 1,300, seeing the tripling. But the fundamental argument for gold has never been better. We had at one time suppression by central banks who were offloading it. Now they're the biggest buyers. We had clearly not any society thinking it was money. Clearly in Asia, particularly in China, they view it as money. And of course the BRICS, and that's one of my biggest bullish factors for gold, is I saw the de-dollarization and countries moving away from the United States economically and from their currency as bullish for gold. So I think the more important way to answer your question is not talk about some of the general stuff or inflation or even against the stock market, is to admire how it's performed in an environment wasn't as conducive as it is now. So that would argue that I still think it has to go a lot higher over time, but I think a reasonable target of 4,000. And remember, when you're in all-time highs, other than a psychological number, there's no real resistance. So, pick 4,000. Yeah, that'll be a round number and so forth. And, Wall Street has treated gold like kryptonite. I think 0.5% of portfolios are assumed to have some exposure to gold. Can you imagine if people just went to 1 or 2%? It's still a very, very viable market for the long term. Well, I think it's going to play a significant role in the BRICS. They have not acquired all of this gold as a trade or personal investment. They certainly can't flip it to someone that's going to pay even more so they profit from it. I think it's been accumulated. It's still probably 12 to 24 months away before they officially come out and say, okay, this is how we're going to trade among ourselves. And part of that is going to be gold. I don't think there's a worldwide situation coming anytime soon, because I think things have to get a lot worse before people realize how messed up we been with fiat currencies. I do still think that one of the ways that they're only going to be able to sell treasury bonds, especially long dated ones, a year from now, because I'm a big believer that short rates can fall, but long rates are only going to go higher. I think that's going to find a way that the Trump administration could reprice its gold that it owns to whatever the current price is, and also introduce longer term 40 or 50-year bonds with some sort of gold backing in order to get people to buy it. I think that's going to be how difficult it's going to come for the United States to fund itself, while other world bond markets, as we speak, are imploding as well. I made a 180, and it was profitable to treat it as the second-class citizen to gold. But earlier this year, when it dipped under 30, when I looked at the fundamental argument, it was never stronger in the 41 years I've been involved. So I became a silver bug. And I also said it probably would lead gold for quite some time to come. And I think that's happening here. I think you make an excellent observation. People who are going to talk about, the Hunt brothers and once went to 50, well, to get back to that, you're right. It's almost going to have to trade at 200 for inflation. So what I have said, and it probably throws me into the silver bug camps completely, is that triple digit price of silver is a legitimate target. First of all, it's not that much more than a double from here. It sounds like a lot because for a lot of years it was single digits, low price. But I think it has every reason to continue to rise with gold. And the competition for it, the stock market, I have to throw this in. I made a big change a couple of weeks ago. I was not in the stock market crash camp. My January forecast for our clients was the stock market was going to be either side of unchanged. I told people to avoid U.S. equities, get into world funds. I love the Chinese market. But a couple of weeks ago, stuff just screamed that we were very vulnerable to a hard fall or even a crash. And that has been competition to gold and silver, and also cryptocurrencies. And so a lessening of the bull move or an actual decline, as long as it's not a total crash.
Lobo Tiggre emphasized that central bank demand remains one of the most powerful forces supporting gold, far outweighing short-term market fluctuations. He argued that nations such as China and Russia, and even some U.S. allies, are unlikely to ever fully trust a dollar-dominated system again. This loss of confidence has fueled massive central bank gold purchases. While Tiggre acknowledged that this trend cannot continue indefinitely, he noted that as long as fiat money can be printed, countries will keep exchanging it for something tangible. He also stressed that despite repeated skepticism at each milestone, whether $2,000, $2,500, $3,000, or now near $3,700, gold has consistently proven resilient and continued to climb. Tiggre views China's gold accumulation as highly strategic, pointing out that the country has already built up its oil reserves and is now buying enormous amounts of gold at both the state and individual levels. China has also become one of the world's largest gold producers, surpassing even South Africa. If Rick Rule's long-anticipated reversion in global gold allocations is truly underway, Tiggre argued, this shift alone could serve as a powerful catalyst to drive gold significantly higher in the years ahead. Let's get back to the interview.
I'm not disagreeing, but I don't think the data is very clear on that. Just last Friday, when gold popped on the surprise non-farm payroll, surprise miss there, surprise only to people who weren't paying attention. But anyway, at least the U.S. 10-year note went up. Like rates went down, bonds went up at the same time that gold did. So it's not a one-on-one thing. I agree that on a broader perspective, that seems to be a trend around the world. But as regards monetary metals, and particularly gold, you also have the central bank buying, which is a big, big deal. And there's a lot. We could probably spend a whole show on just that. But I think the key points on that are, after the so-called weaponization of the dollar, by the way, by Biden, not Trump, in response to the second invasion of Ukraine by Russia. You don't have to be an enemy of the United States or axis of evil or anything like that. Like everybody got the memo at that point, like, holy cow, the United States can on its own just choke off our financial lifeblood. The SWIFT system goes through New York, and relying on U.S. treasuries always seems so safe, think assets can be frozen. I mean, this wasn't just a wake-up call. I see this as a paradigm shift, a one-way door the world has stepped through. And even if the war on Ukraine ends and Trump and Putin kiss and make up and everybody lives happily ever after, that's not going to happen. But if something along those lines happen, I don't think either China or Russia or really anybody else would say, oh, well, let's go back to the way things were before 2022. We're okay with having Washington and New York control our finances. I don't see that happening. And so the central bank buying, it can't go on forever, but it is a huge offtake that just wasn't there before. And I suppose I say it can't go on forever, but if they keep printing, it can. You can print worthless fiat and exchange it for something physical that has value in the real world. Maybe you do keep going until you end up in a hyperinflationary environment. I'm not predicting that. I'm just saying that, every time gold hits a new high, there's a lot of people come running out and saying, oh, this is it. That's the peak. Now it's got to correct from here. And it seems like, and I'm not saying that the gold can go to the moon and beyond to the stars or whatever, but it is a fact that every time this has happened and this chorus has come out of, oh, that's the peak at 2000. Oh, no, well, that's the peak at 2500. Oh, no, this is the peak at 3000. That's way too high, too fast. And, 3,500, oh, well, this is outrageous. This is ridiculous. Gold is not worth that much, blah, blah, blah. Every time. And now here we are looking at 37 in the face, closer to 4,000 to 3,000. I don't know where it peaks. I'm not saying there can't be a correction. What I am saying is that it's clear to me that the game has changed. And one of the aspects of this is clearly the central bank buying, which puts if not a floor, it backstops the 2 steps forward that we keep taking. And I don't know if you want to jump in with a question there, Anthony, or not, but I think that is one major thing. And I do think that we're starting to see something we really haven't seen for decades. And that is, again, quoting our friend Rick Rule, he likes to say that the average global allocation to gold, the average portfolio allocation globally for like 5 decades or something has been 2%. But recently it's been 0.5%. Like nobody had any gold. So a reversion to mean would 4x 4 times, not foreign exchange, would 4 times the investment demand for gold. And people have been saying, well, when is that going to happen? When is it going to happen? I don't know if it'll ever happen. But even if it only goes back to halfway, to 1% rather than 2%, that still doubles your investment demand. So sorry to rattle on, but there's evidence that this may be happening now. I see it anecdotally in interviews on Bloomberg or other mainstream financial outlets where the host will ask people what they're doing and they'll talk about their various strategies. And then they'll often throw in, almost apologetically, oh, yeah, and we've got a little bit of gold to hedge as well. That just wasn't happening a couple of years ago. So that's anecdotal. More, I don't have a statistic, but maybe a little more substantial. If you look at how gold has become a crowded trade amongst institutional investors in the West, that's really interesting. That wasn't there before. We still don't have retail participation, which is another reason why I'm not calling a top yet in gold. We don't have that mania blow-off type market that we've seen in the past. And by the way, yes, I was just a kid back in the 1980 peak, but I was there and I was participating. I was buying silver, the poor man's gold at the time. But I was definitely following it. And it's not like that today. I mean, I'm a shoe shine boy. I'm the lawnmower kid, right? And I'm buying my silver rounds. The lawnmower kid has never even heard of gold or silver this time around yet. So I do think that eventual blow off peak to this broader market move is still ahead of us. And that leaves us in this interesting point of if that allocation that Rick Rule has been talking about for so long, if that's starting to happen, if this crowded trade on Wall Street into gold with all these guys saying, yeah, and we're hedging with a bit of gold, if that's the beginning of that reversion to mean that Rick has talked about, that's a big deal. And that alone could take gold higher. Again, I don't want to come across like a perma-bull gold bug who's always saying gold's going to the moon.
Yeah.
And sorry, one more thing about China gold buying. They buy huge amounts of gold. China central bank, and that's just the central bank. Individuals buy gold. The government did a reversal, whereas before it was illegal to own bullion, frowned upon. Now owning gold is a good thing, and the government encourages it. Funny story. I remember the first time I went to China, it was still illegal. But you could buy a gold statue of Chairman Mao because that wasn't hoarding gold. That was being patriotic. And you could buy a 1 ounce Mao. You could buy a 1 kilo Mao if you were really patriotic, right? So this is a big change in China. So you've got official accumulation, you've got the private sector accumulation. And the other thing that people often forget is that China is now one of the biggest gold producers in the world. It's a bigger gold producer than South Africa. So we can tell, or we have reports of gold imported through Hong Kong into China, and it's large amounts. What we don't have is what happened to all that domestically produced gold. How much is it really? Where's it all going? It's not leaving China, would be my supposition.
Gold and silver are increasingly central to a changing financial landscape. Gold has outperformed stocks and bonds for decades, yet remains underowned, with central banks driving demand while retail investors stay on the sidelines. Silver, once overlooked, is now showing potential to lead, with prospects of reaching triple-digit prices. BRICS accumulation and China's strategic buying highlight their role in reshaping trade and monetary systems. Despite repeated calls of peaks, both metals continue to rise on structural demand. Together, gold and silver stand as core assets in the unfolding global realignment. Could gold and silver become the foundation of a new global monetary system? Stay tuned. If you're interested in real, data-backed insights on the financial system, hit like and subscribe so you never miss our weekly updates. Thank you for your support, and we hope you enjoy the video.